Picture leaving a train station with 1 mile left to go. Walking feels slow, a car feels silly, and the bus might not come for 15 minutes. That tiny in-between trip is where Lime wants to live, and now the company behind those green bikes and scooters is asking public investors to come along. The company is Neutron Holdings, better known as Lime, and the stock market nickname will be Lime. On the cursor stocks, the question isn't just whether you've seen the scooters on a sidewalk. It's this: what would have to be true for this IPO to actually make sense? Lime was founded in 2017 and is led by CEO Wayne Ting from San Francisco. This isn't a tiny side project anymore. The prospectus says Lime operated in about 230 cities across 29 countries at the end of 2025, which means the little trip from the train to the office has become a global business. What Lime actually does is pretty simple. It puts electric scooters and bikes around cities, lets people find and unlock them through an app, and charges for short rentals. The hidden hard part is keeping enough vehicles charged, repaired, parked legally, and close enough that the rider trusts one will be there. That last-mile trip sounds small, but cities are full of small trips. Lime says most of its service is built for rides under 5 miles, the kind where you don't want to park a car and don't want to lose time waiting. If Lime can make those trips feel reliable, it earns a chance to become a habit. The money engine is the ride itself. A rider pays when they unlock a vehicle, rides for a few minutes, and pays again the next time. In 2025, most revenue came from pay-as-you-go rides, while passes and subscriptions made up the rest, which matters because regular riders are usually more valuable than one-time tourists. Now comes the IPO, the moment a private company starts selling tiny ownership pieces of itself on the stock market. Lime is set to list on NASDAQ on July 1, 2026, under Lime. The shares are expected between $24 and $26, with the deal pointing to an expected price around $26 a share. Why go public at all? Usually, a company wants money to grow. A public market where shares can trade, more visibility, and sometimes a way for early holders to sell some stock. For Lime, the prospectus says the company will sell most of the IPO shares itself, while selling stockholders are selling a much smaller piece. The headline raise is about $180.9 million. Since a final stock market value hasn't been set yet, don't force a fake price tag onto the whole company. A better scale check is this. The raise alone is about 1/5 of Lime's 2025 revenue, so Wall Street is funding a real operating business, not just an idea. The growth story is not mysterious. More cities, more vehicles, more riders, and more rides per vehicle. Revenue grew from about $522 million in 2023 to about $887 million in 2025. That's the bull case in one sentence. If the last-mile trip keeps becoming normal, Lime has more chances to get paid. Here's where the story gets more interesting. Lime says monthly active users rose from about 2.6 million in 2023 to about 3.8 million in 2025. For a beginner, that's not just app trivia. It means more people are doing the same simple thing, opening the app because the short ride feels worth paying for. The first bull argument is convenience. If you know a Lime is nearby, the trip from the station to the office becomes easier to choose. Lime says its average operational fleet grew to about 325,000 vehicles in 2025, and more available vehicles can make the service feel less random and more dependable. The second bull argument is city permission. Lime doesn't just need riders, it needs cities to keep saying yes. The prospectus says 63% of the cities it operated in during 2025 had been Lime markets for at least 4 years. That suggests some city relationships are sticking, which matters in a business built on sidewalks and permits. The third bull argument is market room. Lime estimates its current serviceable opportunity at about $6.1 billion, and a much larger long-term opportunity if more cities and riders adopt shared bikes and scooters. That's management's view, not a guarantee, but it explains why investors may care about these tiny rides. That sounds powerful, but there's a catch. Lime is not just an app, it's a moving fleet of physical machines. Scooters break, batteries need charging, Cities change rules, weather changes demand, and riders can switch to another option fast. The same last-mile trip that looks easy on your phone is expensive to run in real life. The financial reality is mixed. In 2025, Lime brought in about $886.7 million of revenue, the money coming in before expenses, but still lost about $59.3 million after the bills were paid. Revenue is how much flows in. Profit is whether the business keeps any of it. Lime is growing, but not profitable yet. Competition is another reality check. The prospectus names rivals like Bird, Bolt, Neutron Mobility, Voy Technology, Dot, HelloRide, and Lyft-linked docked bike systems. A rider usually doesn't care who owns the scooter. They care which one is closest, safe, cheap, and actually works when they need it. This is the part investors will argue about. The full IPO valuation hasn't been finalized, so the question becomes more practical. Can Lime keep growing into a public company story while shrinking losses and handling its debt? If the train station ride becomes a daily habit, the numbers can improve. If not, the price will feel heavy. The IPO money mostly goes into the business, but a big piece has a very specific job. The prospectus estimates about $141.6 million of net proceeds, with $115 million intended to repay a senior secured term loan. That's useful, but it also tells you Lime is going public partly to clean up the balance sheet. There's also a lockup, a waiting period when early insiders usually can't sell shares yet. Lime says many holders are locked up for 160 days, while Uber has extra limits stretching up to 2 years. That matters because when restrictions end, more shares can hit the market, and extra supply can pressure the stock. After Lime lists, watch 3 simple signals. First, do monthly active users keep growing? Second, do losses get smaller while revenue rises? Third, do cities keep renewing permits and letting Lime expand fleets? Those are the clues that tell you whether the convenient little ride is turning into a stronger business. So here's the balanced version. The dream is that Lime becomes a normal part of city travel, the quick answer for short trips that cars and buses handle badly. The doubt is that physical fleets, regulation, debt, and competition make this harder than a clean app story. No one needs to guess. The next results will show it. And that's the useful skill. You can now read this IPO story yourself. Ask what Lime sells, who needs it, how money comes in, what could go right, and what could break. Follow the cursor stocks for IPO stories without the fog. This video is for information and education only, not financial advice.